Hello traders, Gary Wagner here. It is currently 12:02 in Honolulu, 6:02 in New York on Thursday, 6th day of October 2022, and this is the daily report for gold and silver. Traders, an interesting day is developing in the financial markets as everyone braces for tomorrow's Labor Department jobs report. In the case of gold, gold is relatively unchanged, up 10 cents currently, with the most active December contract fixed at $1,720.90. It traded to a high of 34 and a low of 1714.80. But what is most interesting about today's unchanged gold price is the dollar is still exceedingly strong. The dollar gained well over 1% today, gaining 1.08%, and the dollar index is currently fixed at 112.21, which is showing us that undoubtedly there were buyers in the market in terms of gold, and those buyers were able to match pressure put on by dollar strength. We can also see that when we view the Kitco Gold Index, which I'll put up in a moment and compare that to spot pricing. Spot pricing is currently at $1,710.10. The Kitco Gold Index screen print I just put up was fixing spot gold at $1,712.80, which shows that dollar strength took away approximately $16.10 of value, and normal trading actually had gold gain about $12.50, reaching a net decline for spot gold on the day of $3.60. Lastly, silver is still strong and still trading well above $20 per ounce. Today it gained about 0.7%, and the most active December contract is currently fixed at $20.69. This first chart is a daily chart of the U.S. dollar index. We can see that while forces caused gold to rise tremendously, hitting this top just above 114 on Wednesday, September 28th. From there, it has declined substantially up until 2 days ago. We can see the top here, and we also do have a Fibonacci retracement set from about 94.50 up to this 20-year high in the dollar. And yesterday, we saw a return to a strong dollar, which resulted in approximately a 2% gain in the dollar over the last 2 days. The one interesting factor, and we'll also see this in our gold chart in a second, is the 23.6% Fibonacci retracement is precisely the low that we saw first occur on Tuesday of this week. That was the closing price. And then, of course, yesterday, it was the opening price for the dollar index right around 110. From there, we've seen it move up substantially, where it's currently fixed at 112.21. Recent dollar strength has helped us curtail any sizable rise in gold because we do have an open order to buy gold at 1705 with a stop at 1688. Just as in the dollar, these fib retracements are very valuable in indicating potential top support or resistance levels. Of course, in the dollar, we were looking at the support level, and in gold, the 23.6% fib retracement gave a strong indication of a potential short-term top right here. Of course, we're hoping that tomorrow's jobs report does result in gold dipping lower long enough or deep enough for us to get filled at 1705, finding support, of course, right around that area, and then moving higher. The key is really going to be next week's CPI report, which is the most important report that the Fed will use prior to meeting on November the 2nd. So, for now, my recommendation is to maintain your open order, to buy gold at 1705 and placing your stop at 1688. This has been Gary Wagner, wishing you as always good trading. We will talk to you tomorrow following the release of the jobs report. Bye-bye.